Today we're going to be talking about a company whose stock has risen almost 30% year to date, and that is none other than Alphabet. And in this video, we will take a look at Alphabet's upcoming Q2 earnings report. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Google's had an incredible start to the year with the stock being up almost 30%, and even over the course of the last year, it gets even better because the stock has risen 44%. And Google has had a very up and down last couple of years. In 2021, the stock peaked around $150. However, over the course of 2022, the stock fell by 41% down to around $88 per share. However, from there, the stock has risen over 100% to where it's sitting at now of around $180 per share. And this strong move up from Google's stock comes from the fact that they have beat on top and bottom line numbers for the last 4 quarters. We can see that most impressively in the last quarter, they beat EPS estimates from analysts by almost 26%, beating revenue as well by 2.3%. And a year ago, they beat analyst expectations by 7.3% on EPS and 2.5% for revenue. And this is why earnings season is so important for companies, because at the end of the day, stock price follows where the fundamentals of the business are trending. And in Google's case, all of the fundamentals have been trending in the right direction. And if you look very closely at these metrics that are EPS and revenue, you actually see how they trend along with the stock price. Here we have EPS. And if you remember, back in 2022, the stock price bottomed out. And what we were seeing is EPS falling by almost 25% year over year. However, in the last 4 quarters, they have shown tremendous growth, growing their EPS by 20% year over year, 36% year over year, 60% year over year, and then 61% year over year in the most recent quarter. And their top line numbers show a similar trend. It doesn't actually go negative, but at one point, Google's revenue was growing by less than 1% year over year in 2022. However, again, in the last 4 quarters, they have turned their revenue growth around, growing by 7% around the middle of 2023, and that has reached all the way up to 15.5% in the most recent quarter. Google is going to announce their Q2 earnings on July 23rd, and analysts are expecting them to come through with an EPS number of $1.84 and revenue of $84.29 billion. And if Google puts up $1.84 of EPS in this upcoming quarter, that will be year-over-year growth of 27.8%. And as I just mentioned, Google has consistently outperformed analyst expectations over the last 4 quarters, so it would not be surprising to see them outperform again and put up a beat on top of these numbers. And when companies are coming through and consistently beating on EPS estimates, that forces analysts to start raising their EPS estimates for the year. And right now, Google's estimate for 2024 is sitting at $7.57. This is up from $5.80 the year prior. But what's very interesting is when you look at 2025, because the low estimate for 2025 is still growth compared to what analysts are expecting in 2024. And they have an average EPS estimate for 2025 of $8.63 and a high estimate of $10.24. On top of that, when a company is consistently increasing the rate of growth, it oftentimes starts to command a higher valuation. Right now, Google's trading at a forward P ratio of a 24.27. If we assume that this valuation will hold constant for the next couple of years, then we can predict where the price will be at based off these EPS numbers. So if Google puts up $7.57 in 2024, that means that the stock price should be trading around $183. However, if Google puts up $8.63 in 2025, that would warrant a stock price of $209. If Google puts up $10.24 of EPS, that means that the stock price could rise all the way up to $248 per share. Personally, I think that Google could put up this $8.63 in 2025. The more difficult question to answer is, could they put up $10.24 of EPS in 2025? That is going to be a little bit more difficult for Google. They need to continue their buyback program. They need to continue outperforming on their EPS and focusing on profitability. They would also need to see the economy actually trend in the right direction. Keep in mind, Google is doing all this with a relatively shaky economy. We have seen a lot of companies expect especially smaller companies, actually underperform the market in terms of their stock price. And a lot of that has to do with consumer sentiment around the economy right now. A lot of consumers have pulled back a little bit on spending and are actually trading down when they go to the grocery store as well as buy new things. So if Google starts to see a trend overall where the economy is doing well and consumers are going out and spending more, I think that could actually contribute to them hitting these EPS numbers and could drive their stock price up to this $248 mark. And obviously, if we were to see rates drop as well, that could be a big factor for Google as well as the broader economy. But keep in mind, do not buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what's an astronaut's favorite part of a computer? Check the comments down below for the answer. Thanks for watching.